So that transition was good. A few culture shocks, even though you're coming home.
Yes.
There are a few culture shocks you still have to go through.
Yeah.
Where you know Kenya, everybody knows each other, for one.
Yes.
I was used to a place where, nobody knew each other. Your own personal life culture shocks. I was used to walking on the street, jogging on the streets, doing all these things. You come to Kenya, you're a CEO. Next moment, I'm being told by my senior management, this thing where you're walking to work
Be careful.
from your home or walking home from work, we don't like it.
How was it leading through the merger process?
It's one of the most difficult things you can do, to be honest with you, in business. Because mergers are one about people.
Yes.
And people are the most difficult
To adjust.
thing to manage. Back to your point, when you're a CEO, your biggest job is people.
Yes.
That's because it's the hardest job. That's why only CEOs can do it well. So someone told me that the day after we announced our merger, LinkedIn had the busiest day in Kenya.
It was
Because everybody's checking,
NIC.
this is the job I do, let me see who does the job on the other side. Right? I'm
Checking
head
each
of
other
head of this, let me see who is the head of.
Because one of us is
Because
losing
one
a
of
job.
us is losing a job.
He's going home. So how did you end up in Bank of America?
Yes, so now I have grown
Eventually.
at Credit Suisse. I grew to be the level of vice president, and the way the stages work, you come in as an analyst, you become an associate, you become a vice president, you become a director, some have a principal, you can become a senior director or a senior principal, then you become a managing director. So it's quite a long journey.
Quite long.
It's a long journey. And so I had become a vice president and I was looking now to become a director at Credit Suisse. And I had moved a few jobs in between, within the same group actually, just moved responsibilities.
Yeah.
I'd gone from being responsible for the team that was we used to call it technical team, the engineering team.
Yes.
Today you call them data scientists
Yes.
and other big words, but we were the engineering team.
Yeah.
And that team is the one that used to create the products, analyze the products, sell the products. We created a lot of fun products, some of which have been blamed for the global crisis,
Yes.
like the CDOs and CLOs. We were the people who created all those products.
Yes.
I was actually one of myself and the guy, the Egyptian guy.
Yes.
I think we built the
You
first.
have brains behind those products.
We built the first working model
Wow.
that could rate CDOs.
Wow.
Yeah, so we were quite a brainy team.
Yes.
The
I
two
can
of us.
imagine. It was a first.
It was the first then,
Yeah.
actually.
Yeah.
So those are some things we used to do, and then you move from there to become the banker facing the client. So you become more of a marketer.
Yes.
So I become more of a marketer at some
Selling
point,
the
selling
products.
selling the product. Not the product we create. Those are called salespeople. The investment banker coverage, we call it coverage, the person who goes to convince a client that you should do this to raise funds. So like today we would go to, I don't know, a customer and say, you have this problem, this is how I think we can solve it for you.
This is an option for
Then you come, we create the product, then somebody else sells the product to investors.
them.
So that's
Okay.
to bring the money back to the
Yes.
client.
Yes.
So I became that person. And that was good. But after a while, I was like, you know what, I'm dealing with accents, all kinds of things. I prefer to go back to doing the technical work. Now leading a much bigger team, which now covered many more products. And so when I was transitioning back, the organization was still deciding whether to give me the job. So they gave me the acting job for a while. It was an interesting transition because when I went back and now I'm acting with this much bigger team now. So organization, the way we announce one, so we'll be acting as we recruit.
Yes.
So them they are recruiting,
Yes.
and I'm
Yes.
still acting. Then my team got together, went to the boss and said, we want John.
Why are you looking for somebody else?
What are you looking?
What?
Doesn't usually happen.
Your team?
Even my management was surprised. Yes, my team went. They said, we want John.
And they didn't say you had sent them?
Hmm?
They didn't think you had sent them?
They didn't. I hadn't sent them, nothing.
They just went and said, we don't want another leader.
I know you're recruiting, but why?
This is our leader.
John is our... Wow. By the time they did that, however, I had become frustrated in a way because I was like, I was doing the job, I was doing it well. These guys are not confirming me. So even when my team went, and I had nothing to do with it, honestly, at this point, Bank of America had known.
Calling.
So they've been calling. And just the week my team went, actually, is when Bank of America gave me an offer.
Wow.
And now I was like, okay. These guys took another couple of weeks to decide.
Whether to actually now confirm you?
So the day they are confirming me, I just had confirmed with Bank of America.
You had
that I'm
already
coming.
signed the offer?
Yes, I signed. It was the most tough things to do.
Wow, tough decision.
And I've never forgotten, actually, that the boss then went and announced in a hall that we have made a decision
to confirm John.
To confirm John, and then he gave my history. Right? But they are saying his poor parents in Africa will be very proud to know, blah, 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 blah. He went on, I went on. I'm like, oh, gosh.
And I have
And I was coming to resign. And I was coming to resign.
You have your offer in your pocket.
So I went back, called Bank of America, told them now, after what has happened, I can't come.
Coming.
I can't come. And they said, no, let's come back to you. They worked on the offer again.
They gave you more money.
They upped it.
They are thinking it's money issue.
They gave me the promotion right away. Come.
To MD.
I was like, no, this is to director.
Oh, no, you went in as director.
To VP to director.
Yes.
So I was like, okay. I went back and I gathered courage, I resigned. That's how I ended up in Bank of America.
Wow.
Bank of America.
Wow.
And it was difficult. Well, it wasn't difficult, but the person who was leading that team was now made to report to me.
Yes.
And he was not happy. Especially because, interesting story I found out, he had been offered the job at Credit Suisse.
This one that people are fighting for you to keep.
Yes, to come and be my boss.
Yes.
And he turned it down. And now I've come to be his boss.
And now you've taken his job.
To be his boss.
This is not
easy. It was difficult. He obviously was very upset, tried to make it difficult for me a bit. But we dealt with it. He stayed, I think, for another year or so. I've told people I'm a good man. But when you have to take certain actions, you do. So some of the actions I took was make sure that he had job offer calls every day. I just call organization, tell them, this guy is looking, please call him. Even though I know he's not looking, just call him. He's good. Just call him. So you get all these phone calls about jobs, and
he's thinking, I'm very popular. I'm very popular in the industry. He doesn't know there's a hand behind.
He's even trying to be mean to me, John. As many people want me. I'm like, oh, really?
Why are you being?
That is wonderful.
Who is calling you?
Who's calling you? My goodness, I want to keep you. I don't think you should leave us. Tell me, he doesn't know I've made all the calls.
Down. You're
calls
pushing
to have him
the
call
buttons.
and get these offers. So.
Wow.
After a year didn't even end, he got a job and left.
And he
got something he liked and he left. Yeah, he left. And that's how I got the team and now stabilized it and then became really enjoyable. Really enjoyable.
You know, John, if we just take a pause there, many people ask me, especially new leaders, how do you deal with members of my team who do not accept my leadership?
Yes.
It looks like you have dealt with that kind
I have. Many places, so, not just there.
Yeah, so that will really be helpful for several people. What do I do?
Yes. What I tell people is when you're a new leader, and I told this to the ones I appoint today, because now I'll appointed CEOs into some of our subsidiaries. And tell them, when you go there, you will find people. You will find many people who work for you.
Yes.
There are people who will accept you, and there are people who will not accept you.
Yes.
And that is natural.
It's natural, yeah.
There are people who want you out tomorrow.
And some people have vested interest.
Vested
that you
interest.
either know or you don't know.
You don't know. And they've been around for long as well.
Long, yes.
So they think they have protection within the organization. So the first thing you do is identify your allies very quickly. That's what I tell people. When you go into a new leadership position, identify your allies very quickly. And make sure you are the allies. Number 2, don't let anybody question your capability. Yeah? So very quickly, learn, teach yourself, and be the best that you can be. Yeah? That do not come pretending you know everything. Right?
Yes.
Remember, you don't know.
Yes.
So take time to learn.
Especially if it's a new organization.
Especially in a new organization. Take time to learn. Don't come and start saying, this one is being done wrongly. These things people have been doing is bad.
You don't understand.
You don't understand.
Yes.
Don't come with that mentality that what people have been doing, you're here to improve or change it dramatically.
Yes.
I know you want to change. All of us want to make changes. But don't let people think that you showed up thinking what they were doing is wrong in the first place.
Yeah, but it can be improved.
People change slowly.
Or done differently over time.
People change slowly over time.
Yes.
Don't assume you'll come and tell them, do it this way because they've always done it this way.
Yes.
So once you identify that part of you, identify who will never change. Yeah? Who are your detractors. And try to use your allies to work on them.
Yeah.
Not you, your allies to work on them.
Indirectly.
Or at least speak well of what you're doing indirectly. Let your work also speak to that. But at the same time, actively work to remove them. Actively work to remove them.
Yeah.
Because they will be your detractors for a long time.
You all the time.
So I have, every place I've gone, I've removed some people. But do it in a dignified manner. That's what I always tell people. So most people that have been removed where I've worked don't know it was engineered, or I knew they would go. Because I've done it in a way so dignified.
And also in a positive way. Like
in
now this guy gets a very nice job,
exactly.
dream job, and he goes.
Exactly. We are still friends. Because he's like,
Wow. Okay.
He's still unhappy I took his job, but at least we are not fighting.
Yes.
Yeah.
That's great. So you stayed in Wall Street for how long?
So I stayed on Wall Street for 14 years.
14 years.
For 14 years.
Okay.
So 14 years between Credit Suisse and Bank of America.
Bank of America.
14 years.
Yeah.
By the time, so at Bank of America, I again rose very quickly. I was confirmed as a managing director after 2 years. And that was a highlight of my life. A real 2 years or 3 years? 3 years. 3 years I was confirmed as a managing director. And the managing director process is a selection process.
Yes.
So it's not your boss decides now it's time to get promoted. There is a committee that's formed. They interview you. They interview many people in the organization. People write recommendations. Then other managing directors sit. You have all these candidates. Then they choose how many, who will be and who will not. So it's a big thing.
Yeah.
And then our names will all be splashed on the New York Times that so and so has been elected. Wow. It was a big thing. So it was a highlight.
So
of my life at Bomber 2007, sorry, 2007. 2007.
That's when you become the managing director.
That's when I became managing director. So end of 2006.
Yeah, but what I'm hearing, John, is that in our careers and our businesses, things don't just happen.
They don't just happen.
They are made to happen.
They're made to happen.
You wanted to become a managing director.
Yes.
So many years, way back.
Way back.
And then you worked on yourself with the eyes on that seat.
The eyes on that seat. Yeah. And back to the networking point I made earlier. You know, I mentioned Credit Suisse and how my team went to say, there's a guy we want.
Yes.
When I look back today, I say, actually, your next job doesn't always depend on your boss.
Yes.
A lot of people forget the people that work for you or work with you. We focus on the boss. And I think that's a mistake I see a lot of people making. That they think, because I have a godfather,
I'll get it.
Forget about you guys. Forget about you people, you work with me or work for me.
I can step
Forget
on
about it. I can step
else.
on you how I want because I have a godfather. I think if you want to rise to the top, all your constituents matter.
Yes.
That's why we do 360.
Including the junior ones.
Including the junior. And even in your own performance, you must do your own 360 evaluation.
Yes.
Yeah, 360 evaluation, because they'll have a say. And now, becoming a managing director, again, the reason I describe that process, it's because the 360 process.
It's very tough.
They're just looking for one person to say,
He's not
John
ready.
is not ready.
Yes.
Right? And that person could be your junior, because they interview your juniors. They interview everybody. Yeah, it's a process. They interview everybody, this committee. Yeah? And then they go through your paperwork. You go present. Then they put, that committee then puts a recommendation. And then all managing directors together to vote on who.
Wow.
Now, that process meant that if any of my juniors said, he's a terrible leader, he mistreats people, he does this,
he's mean,
you're finished.
Wow.
There's no way.
Do they also talk to the clients? You
And they
work
talk
with,
to the client as well.
I imagine.
You talk to the clients as well.
Yeah, and then they'll say, this guy, he really doesn't
Yeah.
honor appointments. or he
Everybody
doesn't-
must agree
Yeah,
that this person
is fit for the role.
is fit for the role.
Wow.
So one of the things I talk about a lot in my leadership, even here, is fairness. And a lot of policies we put together are about, I look at them from a position of, is it fair? Is it fair to everybody? Can anybody say that I was discriminated against? So I'm very clear about it must be fair.
Yes.
Somebody needs to leave the organization, that process must be fair.
Fair. Yes.
Right?
Yes.
And that's how I approach my life. Be very
Wow.
fair to people.
Wow.
Yeah.
Anyway, things are looking good. You're MD. Then the crisis happens. I imagine
Yes.
right after your appointment. How unlucky are you?
Right after my appointment is the famous global financial crisis. And I am in the eye of the storm. Because the cause of the financial crisis was mortgage securitization. And that's what I used
you
to
had
do.
engineered.
Which I used to do. And these so-called collateralized debt obligations, CDOs, are eye of the storm,
Yes.
right? I mean, the whole crisis became a credit crisis. And the reality is, and I'd love to sit down one day talk to people about the crisis, because I know it very, very well.
There are a lot of misconceptions.
There are
also.
misconceptions
Yeah.
about what actually
Yeah,
happened,
what
right?
what
What
went
actually
wrong.
happened.
Yeah.
But the bottom line was that money had become very cheap. That was the crisis. Money had become so cheap.
Too cheap.
Too cheap. When money becomes very cheap, asset prices rise, right? Because now you're borrowing to buy assets.
Yes.
Even here, if we made money very cheap, guess what? All of us will take the cheap money, go buy houses, isn't it?
Yeah. And
What happens
not
when you're
one,
buying
not
houses?
two, many,
Prices
many. Yes.
go up,
Many.
isn't it?
Yes.
That's what happens.
Yes.
And that is what happened all over the world. Money was very cheap, right? And so everybody could borrow money and go buy assets.
Assets.
And the assets that people were buying were mostly houses.
Yes.
Yeah.
Yes.
It became to the point, so cheap to the point where I knew a friend of mine who, a colleague actually, used to work for me, this guy. They had a nanny. Yeah, what you call them au pair in America. But there's a nanny who had come, become American, or the green card holder. She owned 6 houses.
A nanny.
Yes.
Wow.
Because she would just get loans.
It was so easy.
It was so easy. You just come, you sign, you didn't have to disclose how much money you make. You used to call them no documentation loan. You don't give any documentation.
So they never ask for cash flows. The way here,
Nothing.
you bankers ask us
Nothing.
cash flows.
That's how cheap money was. But the reason they didn't care too much is because when you want to sell that house, there's a buyer.
Yes.
Right? So they'll get their money back.
Easy to dispose.
It's easy to
You
dispose.
make your small profit.
So these people would go, no doc, take these loans.
Yes.
You don't pay them. You wait for a year. Well, you pay something small. You wait for a year, you sell your house for double.
What?
That's
You
how
keep
people
the
make-
profit, you pay off the
profit.
loan.
That's what was happening. So that was actually the problem. So we got to the point where people are building houses or buying houses they don't intend to live in
Yes.
or even do anything with. You're just buying it to wait a year and
And sell.
sell.
So it's speculation.
It's pure speculation.
Yeah, on real estate.
And when you speculate on real estate, we have a problem. Kenya, we have seen it, where people would buy plots in, I don't know, in Kajiado, where they will never visit, they don't know where
They
it
have
is.
no idea where it is.
They buy it on paper, they're trying to sell it on paper later on, right?
Yeah.
They have no
maybe-
intention of ever building,
Yeah.
right?
Yeah.
And that is what happens when then money becomes expensive. Those plots, nobody wants to see them, nobody wants to buy them. So it was the same thing. When money then became expensive very quickly, nobody wants to buy these houses. So a lot of loans went bad, right? Because nobody is buying them. And that was the beginning of the crisis. Money was no longer cheap.
Yeah.
These houses were not moving. Nobody's living in these houses. They're all empty. Nobody's paying rent, right? So what happens? People cannot pay their mortgages or their loans to buy these houses. And therefore it becomes a financial crisis because people are not able to service anything. That's what really caused it. Now
you are a leader.
Yes.
And it's a big, big crisis. What did you have to do?
So a couple of things. I had been lucky because in developing some of these models, I understood this business extremely well.
Yes.
So it's actually been one of the people who had actually said no to a good number of transactions that Bank of America would have entered into. There is a famous transaction that we did with Lehman Brothers, which went down.
Yes.
And it's mentioned when you read about Lehman Brothers. There's a famous transaction they did. It was called Applebee's securitization. It's there. Applebee's securitization was what we call whole business securitization. So you take a whole business. Applebee's is a huge chain of restaurants.
Restaurants, okay.
Yes, restaurants.
Yes.
And you securitize their business by saying all the cash flows from the restaurants will all come to one place.
Yes.
Yeah, and that's what you sell, those cash flows. So you raise a lot of money by selling all those future cash flows, right? So they'll come, you say, you take away the salaries and everything else goes to pay investors. I looked at it. It was being done between Lehman and ourselves. I looked at it, used our models, and I disagreed with the ratings that the rating agencies were giving, the Moody's and others. I disagreed with them.
Yeah.
I disagreed with Lehman. And I remember very well Lehman sending a note to my boss then saying, John does not know what he's doing. So we're not going to work with him. And I went to my boss and I said, they don't know what they're doing. We should not even be working with them. That was the first deal that went bad and cost Lehman a few billion dollars.
Wow.
The one I had said no to.
Yes. So you would have done it if you had not said no.
I said absolutely not.
Wow.
So I was very proud of the choices I made.
That you had made.
And that helped me because now...
And that was because of how well you understood that whole product. And
yes.
Yeah.
One, I understood. And two is that integrity has always a very big value for me. So whereas in investment banking, if you did a deal like that where the company is able to make, I think we're going to make $100 million in fees, I would have gotten a very good bonus.
Yes.
But I said, no, it's not worth it. It's absolutely not worth it.
Yes.
So integrity for me has always been very important. If I don't believe in something, even if it could benefit me immensely, I still won't do it.
Yes.
Because I always say there is going to be another day to make that dollar.
More money in a cleaner way, less risky way.
Absolutely.
Yeah, you don't have to do it just for the sake of the money.
So how do you deal with the crisis? That was your question. So when it came then, obviously the first thing we did was to fire a lot of people. So it was painful. We had to let a lot of people go. And being head of the group that time, I had to let a lot of people go. That was painful to see some of my friends leave. And then I was quite involved in evaluating because Bank of America was still very strong then, evaluating other banks that were falling. So one of those was Lehman. So I did a lot of the work to evaluate Lehman Brothers, and actually Bank of America was going to buy Lehman Brothers, so I was involved in that transaction. And then last minute, they decided to let it go bankrupt and bought Merrill Lynch. So I was there on the discussion. I wouldn't say Merrill Lynch discussion, I was involved, but Lehman was very involved. The day they announced they're buying Merrill Lynch, actually, that's the week. They announced it on a Sunday night, but that's the week I resigned. And I resigned because I had gotten an opportunity through Barclays now to come back to Africa. to lead what they call the Africa Investment Banking from South Africa through ABSA.
Yes.
They had bought ABSA and created an ABSA Capital, which was the investment bank. I think I met you when I was there, actually.
Yeah, we had a few meetings.
Yes, I met you when I was there.
Yeah.
And I came to lead the Africa. In South Africa, they call everything else Africa.
Yes.
So to lead the Africa Investment Banking.
So you are in charge of what? Sub-Saharan
Sub-Saharan Africa. Indeed.
Okay.
Excluding South Africa.
Now
so I was in charge of everything else.
Coming closer home.
So I'm coming closer home.
Okay.
So that opportunity came, and I said, you know what, actually, I'm coming closer home. I just gotten married, and my wife didn't really like where we were staying. So she was quite open to move. So I said, okay, let's try South Africa.
Oh, that's
so that's ended up in South Africa.
That's very nice. Yeah. Now, ABSA or Barclays.
Yes.
Multinational global banking business, and here you are heading the sub-Saharan business.
Yes.
I mean, it's not a small appointment. Why did you choose a local Kenyan bank over Barclays?
Yes.
Later on. How long did you stay in
I was there
South
for
Africa?
5 years.
5 years.
I was in South Africa for 5 years.
5 years.
During that time, a lot of changes happened. At some point, I got appointed as CEO of what they called ABSA Africa. ABSA Africa was not too different to a job you had where you're responsible for all the subsidiaries outside of South Africa.
Yes.
So I became CEO of ABSA Africa, responsible for all the subsidiaries outside of South Africa. So I looked at, again, the number of banks, like NBC in Tanzania, Barclays in Mozambique. We opened an office in Nigeria, in Namibia, which I was responsible for. So we looked at everything. I was now responsible for all the businesses out of South Africa. And then at some point we decided now to merge. So Barclays and ABSA decided to merge their operations in Africa. So that meant now the Barclays in Africa became part of ABSA.
Oh, I see.
And so I was involved in that process, very involved. The restructuring to close the office in Barclays had an Africa office was in Dubai. So I was involved in closing it, moving all those people to South Africa or whoever wanted to move.
Yes.
Some did not move, but a good number of them moved to South Africa. So I was involved in that process, setting up a new entity called Barclays Africa, which was now looking after all the businesses across Africa. The holding company. And then I was then appointed responsible for investment banking as before, but now I was added all the corporate banking within all the constituent banks. So the corporate banking heads of every country would report to me. That's how it was.
So now you have, in addition to investment banking, also the corporate bank side of the business.
The corporate bank of the side of the business. And now we have many banks because now all the Barclays banks are part of us. Many countries. I think at some point we had banks in 13 countries.
Wow.
So I was responsible for the corporate banking and commercial banking and then the investment banking, and I sat on a number of the boards.
Yes.
But the whole culture had started changing. Now, Barclays Africa, as it was called, which is now being run by South Africans, no offense to them, had a different idea of strategy and how they should run it, which I necessarily did not believe in too much. So there's a lot of disagreements on how they should work.
How it should be.
Having run ABSA Africa, I sort of knew how the entities in every country worked. And so the structure we're trying to adopt, where it was centered on South Africa, is very functional, the MD does nothing kind of approach, I really did not agree with it.
It did not work.
It wasn't going to work in our context. And then, you're rolling out products within, like technology, for example. My corporate banking technology wants to work this way. We're going to put it in every country. And again, the MD has no say. We're just putting it in all these countries. And you can't do it all at once because you want to control it. So you end up putting it in one country, another country, another country. By the time you put it to the fourth country, the technology is old. Now you need it. You know what I mean?
Yes.
So I said, guys, it doesn't work this way.
It's not working. And it's too slow for business.
It's too slow.
Yeah.
So we had a lot of arguments back and forth.
Okay.
And so while I was going through that, with all these changes also, there was an opening here at KCB. At KCB. So I was called to come and interview for KCB when Martin Oduor left.
Oh, I see, for the MD?
Yeah.
Okay.
So I came and interviewed, actually. I didn't get the role, as you know. My friend Joshua Igara got the role.
Oh yeah, that's when Joshua came.
Joshua Igara was appointed.
Yeah. Okay.
But I think I had made a good impression in my interviews, because when an opening happened at NIC, it was I didn't know the bank, to tell you the truth, at that point.
Okay, because you had been away for too long.
I'd been away for too long.
Too long, yeah.
So there was an opening at NIC after James Macharia was appointed a cabinet secretary.
Cabinet secretary.
Cabinet secretary.
Yeah.
One of the board members at NIC was a partner to a board member at KCB who had interviewed me.
Yes.
So he tells me, is that partner who told him, there's a guy we met from South Africa that you people must speak with. So that's how I got the call for NIC.
Oh, so they actually had
So again, that networking, yes. So that whole networking thing again works.
Yes.
Because he said, we met this guy, we really liked him, but we decided to go with the internal candidate.
Yeah.
But if I were you, I'd certainly look at him.
Okay.
So that's how, now luckily that the board member at NIC, who is a lawyer, I wouldn't mention his name, had met me on a transaction we had worked on together.
You had done together.
So he said, oh, that John, yes, I know him. He's quite good.
Yes.
He was very good on this thing we did.
Yes.
So that's how I got.
So he highly recommended you.
Yes.
It's highly recommended.
Yes.
Wow.
Highly recommended.
Wonderful.
So that's how I ended up here.
Yes.
Were
you also feeling like you
at this
want
point
to come back home?
At this point, I was not feeling like I must come back to Kenya.
No. South Africa is
South Africa and
like
Kenya.
Home. Yeah.
And my business covered Kenya also.
Oh, I see.
As well.
So you're in and out also.
So I was in and out a lot. So I wasn't looking to come back.
Okay.
But the opportunity to come and build this organization, and I was very sure I'll build it to be one of the biggest organizations in the region. It
was very exciting for you.
It was exciting because I said, actually, when I go there, I look for opportunities to build it.
Wow. Okay.
So that was the challenge I gave myself.
Yeah. So here now you didn't move for the money. Okay.
No.
Maybe a bit of money, but
I can assure you, no, it wasn't.
It was more the purpose,
Yes.
to build a big institution out of what we have already.
Yes. On the money side, I can assure you, it wasn't for the money. Yeah, it was less money.
You would have done better in
it was less
South
money.
Africa.
Yeah, I was doing better.
Either with ABSA or something.
Yeah, even South Africa, when I moved,
yeah.
I would have done better in the US at this point. Yeah.
Okay.
So it was more of the fulfillment. I mean, the opportunity to come and run investment banking across Africa, to me, was very fulfilling.
Okay.
The opportunity to come and build a big bank in the region. Because I was pretty sure when I come here, we'll grow it to be one of the biggest. I thought we'll grow to a number of countries. That time, your old employer was going into every country. I was very sure we'll come and we will grow. I was quite excited.
They are called the big dreams.
Big dreams.
So tell us now, you've been recommended, you've been hired as the CEO for NIC.
Yes.
To replace Mr. James Macharia. So how did that go?
No, that was again...
now this is full commercial banking.
This is commercial banking.
Yeah.
So let me say that when I was CEO of ABSA Africa, I looked after some commercial banks.
Yes.
So I had a bit of that commercial bank experience. Because as I said, banks like NBC in Tanzania were part of my responsibility.
Yes.
I sat on their board, their CEO reported to me, so it was, I was responsible for some of the commercial banks across the region. And so I had come to learn quite a bit about retail, commercial banks, how they work.
Yes.
Obviously, you don't understand it as well when you're not a practitioner. I was at group. So I was coming here now to be at the center of it. I'd also gotten an opportunity to work with a number of Kenyan clients because I also covered Kenya as head of corporate banking for Africa.
Yes.
So I had already known quite a few customers and how business is done in Kenya. So that was very helpful. So coming to NIC was an exciting transition, a nervous one, because for the first time I'm coming back to Kenya to work.
Yes.
And I'm coming back as a CEO, nonetheless. I'm coming back to answer to a board. There are all these stories about Kenyan boards and how they work. And here I'm coming back to answer to one.
You will tell us one day.
And and all those. So I came in a bit nervous, but very ambitious also. I had big dreams. But as I said earlier, one thing I have learned over time is transitions have to be handled very carefully. Don't pretend you know everything.
Yes.
So I came very quickly to find out who my allies are.
Yes.
Who are my adversaries are going to be. Who do I need to change? Who do I need to keep? And also took time to understand the business. And I think that was important. Now, often when you do that, people will judge you to be slow. So if you go to a new organization and you do that, a lot of times you look like you're slow.
You're doing nothing.
Yeah, doing nothing for a while, right? And I think I had that.
They even start questioning, why do they think he's the right person?
I remember the board asked me, you've been here for, what have you done?
What do you have to
right?
show?
What do you have to show for it?
Yeah.
But actually it was so necessary that I take it, understand the people, bring the people to follow you, so that when you start now implementing the change you want to implement,
you move fast,
you're not fighting, spending too much time fighting people, because people have now bought into your vision. They have agreed you're one of us. Now you're changing as one of us. And that is something I do quite well. Every new organization I go to, I take my time to get to know people. I take my time to know how organizations work. I take my time to try to bring people together, so that when we start on a journey, we're moving together. So that transition was good. A few culture shocks, even though you're coming home.
Yes.
There are a few culture shocks you still have to go through.
Yeah.
Where you know Kenya, everybody knows each other, for one.
Yes.
I was used to a place where, nobody knew each other. Your own personal life culture shocks. I was used to walking on the streets, jogging on the streets, doing all these things. You come to Kenya, you're a CEO. Next moment, I'm being told by my senior management, this thing where you're walking to work
Be careful.
from your home or walking home from work, we don't like it. Be careful. We don't do that here. Such things. I was the type of guy who will take a matatu once in a while. I'm told, no. We don't do that here.
It's not good for the brand.
It's not good for the brand. So those are some things I very quickly
You had to learn. Yes.
adjusted to.
Yeah.
But it was a very good business. NIC was a very good business, extremely well run, fantastic board, and that's what really mattered. They worked on me, supported me, and so they were able to agree to a lot of the changes I wanted to make, and a lot of the ambitions that I had. So that's what we did. We built a very solid business. There was always that talk of a merger with CBA then.
Yes.
Yeah, and I found it when I came. They've been talked about for many years.
There were rumors for a long time.
And the rumors for a long time.
Yeah.
And so when now we had settled and now we've grown to be this solid bank, I came to the board and told them, I think for us now to leap to the next level, we need to do a merger.
Yes.
So I presented to them a number of options. They looked at them. They liked them, but at the end of it, they said, but there's this bank called CBA.
Yes.
I said, okay, I know it's been rumored, we've talked about it. I haven't looked at it because I assumed you people decided no because you've always talked about it.
Yes.
So can we talk about other things? So I went away, stayed forward, came back with another proposal. Now, part of the ambition is to be here. To get here, we need to do...
This is what we need.
These are the mergers we want us to do, and we need size. So finished, they were like, no, there's that bank called CBA. So I actually sat the board and said, okay, I'm bringing no more proposals to this board until we decide whether we're moving or not moving to CBA.
Do you want to move or not? So
they said, John, you have to go and come and tell us whether you want to move. So I went, did some work, did some research.
What is in your court now?
Came back, they said, we want to move.
This is the proposal.
You're sure? Yes. Okay. So that's how the merger conversations actually began.
So you got the in-principle approval.
So I got in-principle approval.
Yes.
Obviously, the principals spoke as well, because they're the ones who had been speaking for a long time.
Yes.
And they said, yeah, they're also ready when you are.
Oh, good.
So that's what happened.
Okay, when people look at mergers from out there, they think it's very easy. You just combine and you have a big organization.
Yes.
We decide what name do we call it. Let's call it NCBA, NIC-CBA.
Yes.
And that's it. Voila, we have it.
Voila, you have a new
Maybe you
bank.
can tell us how was it leading through the merger process?
It's one of the most difficult things you can do, to be honest with you, in business. Because mergers are about people.
Yes.
And people are the most difficult
to adjust.
Thing to manage. Back to your point, when you're a CEO, your biggest job is people.
Yes.
That's because it's the hardest job. That's why only CEOs can do it well.
Yes.
And mergers are about people. They're about cultures.
Yes.
We have two very different cultures. From outside, we look like we were similar, but we're actually very different. How people work, how they relate to each other, what they care about, what's most important to people. Those small things,
how we do things,
are very different.
And what we believe in.
And so luckily ours was helped because the key shareholders agreed early enough we're doing this merger.
The purpose was clear.
Purpose was clear. We're going to do it. So the things we had to do was now to make it work.
And get everyone else to come.
Get everybody else to line up.
Yes.
The process obviously involves a lot of external stakeholders, and those are processes. They're easier because once you explain to them why the reason you want to do this, they will go through the motions. They eventually tell you, okay, fine. The regulators will tell you, fine. Competition authority, another regulator will tell you, fine, but do not do A, B, C, D, right? The conditions. So those are easy to deal with. What is hardest to deal with are that you have people who you have just said the jobs are threatened.
And you have two businesses running.
Two businesses that are big.
Yeah,
right?
Branches are open.
So someone told me that the day after we announced our merger, LinkedIn had the busiest day in Kenya.
It was
because everybody's checking. NIC. This is the job I do. Let me see who does the job on the other side. What? Right? I'm head of this. Let me see who is the head of.
Because one of us is losing a job.
Because one of us is losing a job.
He's going home.
So LinkedIn had its busiest day in Kenya that day we announced our merger. Because everybody was checking who is my competitor on the other side. Right?
Let me ask you.
Yeah.
There were two MDs.
Yes.
Did you also go to LinkedIn?
Everybody did. Everybody did. You all had to.
There was an MD in CBA.
There's an MD on this side.
You are the MD in NIC. But you are right.
All of us had to. But on a serious note, everybody had to. I think I may not have because I knew them. Yes. We had been working with them before we announced. Obviously, there are many secret meetings that happen. Yes, as you know, a few. You've done many. The many secret meetings have happened. You sort of know each other. By the time public.
Yes.
Or the rest of the organization is knowing.
It's a lot of ground.
They've had many coffees and teas and meetings.
And misunderstandings and
understandings. Yes, exactly. So as we knew each other. At that level, at least, we knew each other. But that's what makes the merger difficult. It's because people are trying to protect their jobs.
Yes.
You want to get information, why do you want it? What is it? How is it going to be used for? Can I be the one presenting it?
Yes.
Right?
Now everyone is taking a position.
Yeah, can I be the one presenting it?
Yes.
Who is designing the structure? Yes. How is it being designed? Yeah? So that's what happens. So actually the customer focus suffers because now you're all internally focused. Right?
Yes.
Culture changes. I mean, getting small things. And then our merger was even more difficult perhaps because it was a merger of equals. We were about equal.
Yes.
So we called it a merger of equals, which meant nobody had a bigger voice than the other.
So it's really more
problem with that is you end up having to carry some inefficiencies. I give people an example and I say, so when we merged, account opening book, right?
Yeah.
And I see we had worked ours down to 3 pages.
Yes.
Right? It was 1 page you need to fill, some conditions of second page, choices of whatever products. The third page was just some information sending you to the website to find the rest of the 5 pages, right? 3 pages, that was it. But really 1 page you needed to fill.
Yes.
That was it.
Yeah.
And we had worked through a journey. When I came to NIC, remember my account opening book was 23 pages. And I said, this cannot be the case. So we actually worked at it, reducing it until it came to 1 page.
Bare minimum.
Bare minimum, right? It was one page. Second page, choice for other things that you might need, credit cards, blah, 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 blah. And the last page was just pointing you out to
get more information if required.
Simple terms and get more information here. CBA had a much bigger, right?
They are not condensed like
They're not condensed.
Yes.
When we merged, instead of saying let's take
your template,
the template or this template,
yes,
we took both, combined them, so we ended up with a bigger.
Oh no! So
right?
you're back to square A,
isn't it? You're back to square A.
Yes.
So those are some of the inefficiencies that happen
and
because
you have to deal with them.
You have to deal with them, and you have to agree that this team is saying these things are so important to us. This one is saying this is so important to us.
Yes.
So
you can't disregard.
Let's combine them.
Yes.
Policies the same. Right? We have these policies and you have these policies. Best thing to do is to make sure we pick everything on your policies and everything on this, put them so every policy becomes almost double what it was.
Yes.
And those are the inefficiencies of a merger of equals.
Yes.
You have to agree to it. Right? And so...
and did you also find that teams like size each other?
And team sizing each other.
Depending on where they are coming from.
A lot. They're sizing each other. Who is superior, who is... Yeah? Luckily, I must say, myself and Isaac Awondo, who was the CEO on the CBA side, we were pretty clear about how we choose the best people.
Yes.
Right?
Yeah.
So we tried to choose the best people and recommend them to the board, and the board agreed to our choices. And we did it in a way that was just, okay, let's put the CVs next to each other. We know these people, let's talk about experiences.
Decide the critical...
the critical things that we care about, and we choose those, right?
Yeah.
There's no...
Who has it?
No, it doesn't matter where somebody comes from.
No emotions.
It wasn't take six. It was, no, let's put it everybody,
who's the best for the job?
At least at senior level.
Yes.
These are the people, let's find them jobs as well. Because there's a lot of work to be done. Where are they going to fit? So that's what we did. So everybody was being carried forward.
Along,
right?
Yes.
Luckily, we were both lean teams, so we were able to accommodate everybody on day one.
So you didn't have to lay off people?
On day one, we did not.
Yeah.
On day one, we did.
Okay.
We did not. Soon thereafter, we had to, primarily because of COVID. COVID came right after we merged.
Yeah, that affected everyone.
Affected business, so affected totally everything. So it was when we looked at our business by the end of 2020, we say, no, people are no longer working. People are working from home. We had all these people. We had created all these jobs. Do we need them? So we gave people a voluntary package. So it wasn't firing, voluntary package, and a lot of people took them.
Okay.
And that's how we ended up shedding people from the merger.
When all the emails go quiet.
Yes.
The phones are quiet. What do you want to be remembered for?
I want to look back and say, I developed people.
Yes.
I want to look back and say that I developed people. My biggest joy, even today, is when one of my staff gets a promotion. Internally or externally.
You don't mind them going
I don't at all. I encourage my staff.
Okay.
I've been called before about people who are looking for CEOs, and I'll tell them, so-and-so who works for me, please talk to them.
Really?
Yeah, absolutely.
And they are good? You're not getting them out?
No, this is not getting this is actually developing people.
Have you ever failed?
I mean, somebody in this room asked me whether I've ever done a CV. Obviously, I've had CVs.
Yes.
I've been rejected for jobs.
Oh.
I gave the story of KCB very openly.
Yes.
I was rejected, and I
thought you are thinking
I thought I was very good.
Candidate.
And I know I was very good.
Hey,
right?
Coming from Wall Street and
all
then
things I had done.
Johannesburg.
And then you're told,
no,
you did not, yeah. And and even when I left school, I probably applied for 20-something jobs and maybe got only 5. There are many letters that I got that said, no.